I am Surya, Assistant Professor, PG and Research Department of Commerce EE, Kamath Arts and Science College, Satyamangalam. We are discussing about income tax topics, meaning of income tax, important definition of income tax, assessee, person, heads of income, assessment year, previous year, resident, residential status. Meaning of income tax. Income tax is a direct tax. It charged on the annual income of an individual or business earned in a financial year. The income tax system in India is governed by the Income Tax Act 1961. Important definition of income tax. Assessee, section 2, subsection 7. It means a person by whom any tax or any other sum of money is payable under this act. Person, section 2, subsection 31. Person includes under income tax is individuals, firm, HUF, company. Heads of income, section 14. Income from salary, income from house property, income from profit and gains of business or profession, income from capital gain, income from other sources. Assessment year, section 2, subsection 9. It means the period of 12 months commencing on the 1st April to 31st March every year. Person income is assessed for pay the tax under this year. Assessment year is income assessing year. For example, 2023 to 24 is assessment year. Previous year, section 2, subsection 34. As the word previous means coming before. In other words, previous year means before the year of assessment year. In other words, previous year means income earning year. For example, 2023 to 24 is assessment year. 2022 to 23 is previous year. Resident. The taxability of an individual in India depends upon his residential status in India for any particular financial year. The term residential status has been coined under the income tax laws of India and must not be confused with an individual's citizenship in India. An individual may be citizen of India but may end up being a non-resident for a particular year. Similarly, a foreign citizen may end up being a resident of India for income tax purposes for a particular year. How to determine residential status? For the purpose of income tax in India, the income tax laws in India classifies taxable persons as a resident and ordinary resident, a resident but not ordinary resident, a non-resident. The taxability differs for each of the above categories of taxpayers. Before we get into taxability, let us first understand how to taxpayer becomes a resident and resident, not ordinary resident, or a non-resident. Resident. A taxpayer would classify as a resident of India if he satisfies one of the following two conditions. Stay in India for a year is 182 days or more in previous year, or stay in India for immediately 4 preceding years in 365 days or more and 60 days or more in the relevant financial year. Exception to residential status. In the event an individual who is a citizen of India leaves India as a member of a group of an Indian ship or for the purpose of employment during the financial year, he will qualify as a resident of India only if he stays in India for 182 days or more. Indian citizen or person of Indian origin who stays outside India comes on a visit to India during the relevant previous year. However, such a person having a total income other than the income from foreign sources which exceeds rupees 15 lakhs during the previous year will be treated as a resident in India if he stays in India during the relevant previous year for 182 days or more, or he stayed in India for 365 days or more during the previous 4 years and he has been in India for at least 120 days in the previous year. As she mentioned as a significant amendment above, that individual will be treated as a deemed resident of India. If a resident of India having total income other than foreign sources exceeds 15 lakhs and nil tax liability in other countries. Resident, not ordinary resident. If an individual qualifies as a resident, the next step is to determine if he or she is a resident and ordinary resident or resident but not ordinary resident. He will be resident if he meets both of the following conditions: has been a resident of India in at least 2 out of 10 years immediately previous years, and has stayed in India for at least 730 days in 7 immediately preceding years. Therefore, there are 3 situations in which an individual is said to be resident, not ordinary resident, if any individual fails to satisfy either or none of the above mentioned conditions. If an individual is an Indian citizen or person of Indian origin having a total income more than exceeding rupees 15 lakhs, excluding foreign income, who has been in India for 120 days or more, but less than 182 days during the previous year. If an individual is deemed to be a resident in India, by default, he will be considered as a resident and not ordinary resident. Non-resident. An individual failing to satisfy the condition of stay in India for 182 days or more in the previous year, or 60 days or more in the previous year, and 365 days in the 4 preceding previous year, will be considered as a non-resident for that financial year. Thank you.